Welcome back. Strong consumer spending and business activity growth drove a 40% profit surge for Southeast Asia's third largest lender, UOB, in 2021. The bank reported a net profit of 4.07 billion Singapore dollars for 2021. That's slightly above analyst estimates. UOB says economic recoveries in Singapore and regional neighbors helped bring in more income for the bank, fueling its profit rise. Net interest income rose 6% from 1 year ago as loans expand 10%. Net interest margin remained stable at 1.56%. Well, the Dow snapped a 3-day losing streak on Wall Street as an easing of geopolitical tensions overshadowed hot U.S. inflation data. All three majors got back to winning ways after Russia confirmed a partial withdrawal of troops from the Ukraine border. The news helped stocks, with the Dow closing up by 1.2%. A big bounce in tech saw the S&P 500 climbing 1.6% and the Nasdaq jump 2.5%. Well, the de-escalating tensions also helped push oil lower. In addition to geopolitical news, investors got another look at the inflation picture on Tuesday. The producer price index jumped 9.7% on year in January. It was up 1% for the month. The index tracks the prices businesses receive for their goods and services, and this latest number adds to calls for the Fed to act at its next meeting. All right, to help us understand more about the future markets trend, we're joined by Tony Nash, founder and CEO with Complete Intelligence, speaking to us from Houston, Texas. Very good afternoon to you, Tony. So traditionally, investors like Fabri because it's a good month for risk-taking, but looking at this Fabri, we are coping with situations like tensions between Ukraine and Russia, as well as Fed rate hikes possible. So maybe investors this time around should remain cautious. What's your take on this?
I think you're right. I think we're in an environment right now where we are seeing a lot of volatility. We saw equity markets fall earlier this week. We're seeing them rise today. And we expect quite a lot of volatility as the Fed and as central banks get their strategies and their new policies together, and as some of these geopolitical tensions, come and go.
And we're also looking at the PPI number released overnight, which puts Fed's policy in the spotlight again. But historically, the Fed hasn't been able to push down inflation without a recession. And this time around, we're talking about economic recovery that's comparatively fragile. So how worried are you about that the Fed's unleash aggressive rate hikes could again bring in another recession?
Well, the Fed always has policy missteps. They're a blunt tool. And so the Fed is in inflation fighting mode right now. They're getting a lot of political pressure to be in inflation fighting mode. The data is telling them they need to be in inflation fighting mode. And so they're definitely going to, well, in March, they're stopping buying assets for their balance sheet, but they're also expected to raise interest rates and then later in Q2 start to tighten their balance sheet, which means they're selling off the assets that they've bought over the last 2 years, and they'll be taking currency out of circulation. So we'll have slightly tighter currency conditions, and we'll have slightly higher interest rates.
Mm-hmm. So are you worried about the possible economic recession in the U.S.?
Yeah, I think everyone sees it as a possibility. I think part of the problem is we don't have the fiscal spending out of the U.S. government that we had in 2021 and 2020. And so the big missing piece in the U.S. economy right now is that fiscal spending that we've had for the past 2 years. So the Biden administration hasn't really been able to get it together to have that fiscal piece. Because what we're looking for is a bridge, really, from the government spending-led economy that we had in 20 and 21 to more of a private sector-led economy in 22. There was a hope that there would be some government spending to bridge that, and we're just not seeing it. So the lack of government spending, I think, more so even than, say, interest rate hikes, will have a negative impact on the economy.
And we've seen that the market have basically priced in the Fed rate hikes. But how do you expect that possible rate hike to affect the value of the currency, the dollar over there?
Sure. I think the dollar, we have a real risk of the dollar appreciating sharply, depending on how aggressive the Fed becomes. I think there will be moderate upward pressure on the dollar as the Fed reins in inflation. So again, they'll shrink the amount of currency available. They'll raise interest rates. Both of these actions typically put upward pressure on dollar values. So, and of course, that would hurt some of the countries in Southeast Asia when people sell or have debt in U.S. dollars. But it could help them if they're selling assets in U.S. dollars, like Malaysia, say, exporting oil and gas.
Tony, nice talking to you as always. Tony Nash, founder and CEO with Complete Intelligence.